So again, my name is Tom. This is the OC Investor Tank. So I started this group because during COVID, I really realized that the fact that we went off the gold standard in the 1970s and the fact that your money, cash became an extra tax after the 1970s, right? It wasn't an asset. Cash became an extra tax. And because of that, the wealth gap gets bigger and bigger and bigger and bigger. And it's, of course, done that. And then eventually people get really squeezed out. And now that inflation has become a big problem because we're printing trillions of dollars, now people really know, oh, shit, I actually got to do something about this, right? So it slowly happens over time until you notice it. And it's almost, I don't want to say it's too late, but it's like you wish you would have like noticed it, way back when. So bottom line is you need assets, right? So you got to have assets to hedge against that. So the government put everyone just said, okay, cool, whatever. We're going to do whatever we can with money to maintain our power, maintain our spending power at the expense of you. So that was what they did back in the 1970s. They pitched it as, a beneficiary thing and it was going to be good for us, but of course it wasn't. So that's why I wanted to start the group, to kind of educate people about money, educate people about assets. I do a good amount of digging for myself, and I wanted to kind of share the things that I know and, have things that have worked for me with you guys. So today we're talking about swing trading. Okay, so what is swing trading? Swing trading is not day trading. Okay, we're not getting into an asset for 10 minutes or 30 minutes and then selling it. We are getting into an asset for at least a few days, likely a few weeks, and maybe even some months. Okay, so that's what we're doing with swing trading. You're getting in something that is pretty cheap at the time and that you have a high probability of catching a few weeks of upside. And then once you get that few weeks of upside, or sometimes it happens pretty quick, and then you can lock in some profits, right? So that's swing trading. So you're not quite a long-term investor. You're not quite like a day trader. You're in the middle. Okay, so that's what swing trading is. So the first thing to be a good trader at any capacity, even if you're a long-term investor, is you've got to have charts. Okay, so a chart is just, it gives you a nice visual picture of what is going on in the price action. Okay, so TradingView is what I use, what I recommend. That is what I use all the time. So they have free accounts. You can go make your account and have all these lists. So I've got current positions. This is a secondary account I manage. These are basically, indexes like the S&P, the QQQ, which is the NASDAQ, stuff like that. But I've got all my different things, right? Africa stocks, blockchain stocks, commodities, crypto pairs, you name it. So you can make all your lists, have them all organized. You don't have to have, big old lists like this, like me. I would suggest you just start with a few different stocks. Start with like the S&P 500, start with the QQQ, maybe Tesla and like Apple, and get like 4 stocks that you're focused on, like swing trading, right? So, or 3 in your case. And focus on just learning how things move and interact and how the market operates a little bit. Okay, so that's kind of the first thing. And so just kind of a quick plug on my YouTube here. So if you go to this video, I show you how I set up all this stuff. It seems overwhelming to know or to see this and kind of understand it. And yes, it does take some time, just like anything, right? You're never going to be, insanely fit the first week you go to the gym. You're never going to figure out real estate the first week you start learning about it. It takes time. It's like a muscle, right? So keep flexing that muscle and it'll get stronger and better. So I teach you how I set up all these charts so that they show the same way. For example, this is a different candle style. This is actually traditional candles. And you can see it's a lot more kind of random looking than something like this, which is the Heikinashi, which basically shows you trends. If it's down, it stays red. If the trend is up, it goes green, right? So that's one of the settings that I show you guys here in my YouTube on this video. So you guys should definitely check it out. It's these stock and crypto trading indicators are game changing. Okay, so you're gonna want to go watch that. It's only about like a 10-minute video, but I kind of show you how I set it up, and and what we're looking at. So that's the first thing is you got to get charts. Okay, there's stockcharts.com. TradingView is by far and away like the most popular amongst traders. So what's that? Bitscap, and that's for it's a crypto exchange, right? But it's kind of focused on crypto mainly. Yeah, that's fine. I mean, whatever you like to use. So yeah, as long as you get something for it. So yeah. What's the YouTube channel? If you just look at my name, so is it Tom or Thomas? Yeah, Thomas Van Aken. So you can go there, find it, and it's literally like the third video I made. So it's like all the way at the bottom. Yeah. They offer charts more so, but they've made partnerships with different brokers to where you can actually put in your orders like right here. So like you right click trade and you can sell or buy. So they do have partnerships with certain brokerages where if you wanted to, it's kind of nice, right? Because like if you see things like, oh, hey, if it falls to this price right here, do an order for a buy. And so you can place things on the chart and say like, okay, if it hits this point, sell, or if it hits this point, buy. So some people like that. For me, I strictly go to my broker to place orders, and then I use this for charts because so yeah, it's free. Yeah, they have like I've got a paid account because I want more features. But I mean, all the things I'm showing you can get with the free account. So. I used to use Thinkorswim. You're gonna have way more options for charting here. So but for some people it may be enough just to use Thinkorswim. But for me, I like using this. So as far as purely charting, yeah. So yeah, so that's one of the biggest things. And it takes a little while to kind of get used to it, right? So reading candles is a whole ball of wax. I'm not going to get into that because there's so much that goes into that. But like for one quick example, because I'm just seeing it right now. So you can see right here we had this downtrend. It caught a bottom, a little bit of an uptrend, and then look at this candle right here. So this is called an inside candle. So you can see that the body is the big green, red or green bar. The body of the candle on this one was inside the previous week. These are all on weeks, right? Because we've got the setting to each candle is a week. So this is an inside candle. So what that tells you is the price is getting tight and it's going to want to expand from there, right? So if I see this on Sunday night and I'm looking at an inside candle, I would say, okay, if it starts in this direction, I'm gonna take the trade because it's gonna likely keep going to the downside because it was condensing down and coiling like a spring to expand the next week, right? So, and that brings me to just one quick thing: expansion leads to contraction, contraction leads to expansion. Okay, so there's rules in price action and how stocks move. Any asset, really. Commodities, corn, orange juice, coffee, crypto, stocks, it's all the same. They all have the same kind of like physical rules in, cyberspace that they all kind of like react to, right? So that's that philosophy right there is that contraction led to the expansion the next week, right? So that very, very tight, little trading body right here, that inside trading candle then led to expansion the very next week.
Like looking at that one, that pressure back down.
Yep. Right.
So before you traded, did you wait for Saturday which way it was going, then you started?
So that's one way of doing it. So there's lots of different ways, right? So and again, I don't think anyone needs to be an expert at reading candles. I think the main thing that you should focus on is a couple of the indicators that I have in my video, but one of the biggest ones is RSI. So RSI is the relative strength index. And so it shows you if it's like generally oversold or if it's overbought, right? So like right here on Coinbase, we had a little pullback from the $110 level. And what told us we might have a little pullback? Well, the RSI, because we got outside of the upper band into an overbought condition, right? So
Yeah, can you tell us what's the yellow line and the purple line?
So the purple line is the RSI index. The yellow line is just a moving average to help you kind of smooth out the ups and downs and to kind of give you a more, sense on the like smoothed out trend, right? So those are moving averages. So same thing like this blue line, that's a moving average on this price. Just like the green line is a moving average, and there's different periods that, those moving averages play out. So like a very typical moving average set, again, it's in the video too, is the 200-day, the 50-day, and the 20-day. So when you're below the 200-day, that's like deep value. There's some deep value there if you're below the 200-day, because pretty rarely do stocks go below the 200-day. So, and usually when they do break the 200-day, so you can see right here, a lot of assets are traded by computers. So, they all kind of program that in. So you kind of see right here, the blue line would be right back here. As soon as it kind of broke that level, you can kind of see it started wanting to like cascade and waterfall down, right? Because the 200-day is a very critical point. If you're above it, you tend to keep going up and be bullish. If you're below it, you might dip down for a little bit and then come back up, or sometimes you kind of break down. Obviously, we had a breakdown because of the economic conditions, right? Wasn't because Coinbase is a bad company, it's because we had bad economic conditions last year. So. Yeah, a little bit. But I wouldn't. So again, I wouldn't get focused on pretend this yellow line isn't there. You can actually go into the settings and get rid of that yellow line if you like. They actually updated the indicator to include that yellow line. I kind of like it. But again, you want to focus on what the purple line's doing. So when was the RSI like beat down as low as it can go? It was beat down right here, right? And then it had one more flush down. But I mean, I was watching Coinbase, through this whole price action. I was picking stuff up here and I was picking stuff up here. So, and then again, we've, uptrended. Now we've kind of pulled back a little bit. So, and it's likely going to, keep doing its thing for the next, probably a couple of years. It's going to be a good asset to have. So, all right, let me kind of follow the list here. I'll also start getting sidetracked. Okay. So yeah, first thing is charts. Again, that's a whole, I could do a whole hour on just candles. I could do a whole hour on just like RSI. But just get a chart so that way you're at least seeing the picture, and then watch my video to where you're learning some more stuff. And then if you guys really want to go deep into some technicals and you really want to learn more about it, this is the channel that I've learned probably, I would say, at least more than 50% of the things that I know about technical trading is figuring out money. So this guy, he posts a video almost every day and analyzes the market and shows you what he's looking at. And he's really good. He's a really good trader. And so he kind of walks you through these technicals and talks about what they mean, right? So I attribute probably most of my success to watching this channel. However, I've also watched a lot of his videos, right? Like I haven't just watched like 1, 2, 3, or 4, or 5 and been like, okay, cool, I'm great now. Like, no, I've studied a lot from this guy. So it does, again, just like anything, it takes a while to be good at it. So especially something like trading where, if you keep doing year after year after year, you're profitable, you're profitable, you're profitable. Well, you're with the same action, the same time, the same input, you're getting bigger and bigger profits, right? Because your account is growing over time. So, okay. So now that we have charts and we're looking at it, we have our little list of, different stocks that we're watching. Okay, cool. How do we know how to enter? That's our next question, right? So one thing you want to look at is it's a market, right? There's buyers and sellers, just like a real estate market. And so when you got too many buyers, prices are high. When you got too many sellers, prices are low. So you want to know, what are the sellers and the buyers thinking? What are they psychologically thinking? Okay. And a really good way to go and see that is to go, you can just Google this. This is CNN Business, but it's called the Fear and Greed Index. Okay. So fear comes in psychologically when you see a bunch of red and your assets going down, and you see the negative on your, brokerage, and you're like, oh crap. Like, ooh, what if this goes down like another 50%? Then you get a little fearful, right? Same thing with to the upside, goes up 30%. You're like, oh man, this is great. I'm going to keep throwing money in. And then you get greedy, and then it flips the other way around, right? So it's the fear and the greed index. That's why it moves in that little sine wave, right? That's why stocks kind of move in that S wave like that. So right now, and so I like to just go to the timeline actually. So right here, like October was the lows, right? So we were at extreme fear here in the markets. And so this is pretty cool because you can literally just go here and you can get a much better entry on basically anything just by knowing where buyers and sellers are at, right? So same thing, we had extreme fear here in, October. Then we got a little greedy here in November. Right in late December, right before the new year, we had a fear eating there too. It popped up, came back down, right? So it's that sine wave, right? Yeah. It's measured just on the S&P and the NASDAQ basically, because so many stocks are represented by the S&P 500, right? There's 500 companies in there. The NASDAQ has 100. And it's also based on macroeconomic factors. What is the dollar doing? What are interest rates doing? Because that helps move the market. If the dollar value is spiking up like crazy, that brings stocks down because they're priced in the dollar. So if the value of the dollar is going up, it's not good. It's going to pull the value of the stock down, right? Generally in the market. So it's mainly driven by macroeconomic factors, and that reflects into what the assets are doing. And it also reflects into where the psychology of the market is too. So that's one good thing to look at. So right now, so let's just go to, again, the QQQ. I like trading the QQQ quite a bit because it moves quite aggressively, because this is, tech stocks, Netflix, Microsoft, Google, all that stuff. So you can see here, this was, October was a low. We had another fear reading here, a little bit of fear reading here. And then we had this big pump. And then from here, we were at like max greed. I mean, like, it was euphoric. Everyone was just buying stuff, right? Here in July. And that's just how it goes. It's psychology, because they see their asset going up, they're making all this money, and they're like, oh yeah, this is great. Like, and then boom, it flips the other way, right? So just again, think about that psychology. If everyone's buying, then you got to be going against the herd, right? And so maybe not like shorting. I wouldn't recommend shorting. I do shorting, but it's taken me a long time to feel comfortable and understand how to really do it properly. But you should mainly be looking to go long, 99% of the time. I'll do inverse and puts. So I'll do inverse ETFs, and I'll do like puts of options. So, or I'll just sell short. So I've got a brokerage account where I can, rather than buy, you hit sell. And so if it goes down 1%, then I gain 1%. So I just closed out a short on Tesla this week. So, yeah, so right here, right, we were at, max euphoria, and then we had a pullback. So again, look at what the market is doing, where the buyers and sellers are psychologically is going to tell you a lot. So, and so you can go pull them all up. You can go compare, this is again the NASDAQ, which is the S&P and the NASDAQ are the two biggest traded ETFs in the market. So if you take this chart and you overlay, let's say I'm going to overlay Tesla. So what do you kind of see, right? So Tesla and the NASDAQ are moving hand in hand. So every little peak and every little valley lines up more or less. So that's why it's good to look at the indexes, because that's what other stocks are going to be following as well. So, all right, let me get rid of this here. Okay, so we've covered that, right? So we know about fear and greed. So again, just go to CNN Business, fear and greed, and Google, bam, it'll pop up. And there's all kinds of resources you can dig into with that. So once you know if you're in a fearful or a greedy market, hopefully you're in a fearful market because now you know your risk is limited because you've already come into a bunch of red, you've already come into a downswing, people are fearful, they're not buying, and that's where the big players buy is they buy against the herd and they're always just staying ahead of the market psychologically, right? So you got to put yourself in that capacity to think about that psychology. That's the biggest thing. So it's really kind of conquering your own inner, psyche is what it really comes down to. So that's why I like trading so much because it's literally all you. Like I played golf for, since I was like 2. That's a very individual sport as well. Tennis. So I really kind of like the individual challenge of trading. So now the next thing you also want to be concerned about is, okay, where are we at in the business cycle? Okay. So the business cycle is the economy growing or is it shrinking? That's simply put, that's what it is. So if you come to just like a quick graphic like this, are we going into a contractionary phase and then we finally bottom? And that's basically we went into a small, quick contractionary phase, basically from the start of 22 to about the very end of 22, right? We were shrinking, the economy was kind of peaked and people were not spending money as much. Basically savings kind of ran a little bit low. So we kind of hit, max velocity of people spending money in the economy. And then that's just kind of how it naturally goes though, right? That same ebb and flow that happens with markets happens with, the actual economy as well. So we probably didn't really finish contracting, October when the lows happened. And the reason is markets are forward looking. So they look out about, 6 to 12 months. So we probably around springtime, that was probably like the lowest. That was probably where we got the lowest economic activity, because that's where everyone was like panicking about the banking crisis and all that stuff, panicking about where their money was in banks. And so that was probably the most contractionary part of the economic cycle. And now we're we're definitely in an expansion from here. So, and likely it's going to go until 2025, 2026. So I follow lots of different, well, I shouldn't say lots of different economists, but I'd say I follow a few different ones. And then one that I really look to quite a bit has some really great models where they actually like forecast this stuff with high probability and it shows where the business cycle is going. So that's one thing to look at. A little bit more complicated to figure out if we are in a expansionary or contractionary phase, but I will say that the contractions are short. They only last about, if it's a deep recession, you're going to last about a couple of years. And if it's a more mild recession, then it's going to last about a year less. So they're much shorter. The expansion phases are much longer. So the probability of you catching the expansion phase is much higher. So kind of by default, which is good. Raoul Pal. So he's really good. He's got a whole, so he's got Real Vision. He's also got Real Vision Crypto. Those are his 2 channels. So he's got like a basically financial education business, but he comes from like the financial world. He used to work for Goldman Sachs for a long, long time. He's actually got a free newsletter that he can send to your email. That's really great. That I would highly recommend. So every week he'll send you like 5 charts that he's looking at and taking a peek at that are really good. Let's see here. So this is a really good piece that he put out on LinkedIn, and he's always posting his stuff on LinkedIn as well. Let's see here. Come on, where's it at? So yeah, so this is kind of a write-up that he did, but here's some of the charts. It's kind of a long write-up, but here's like some of the charts that he has. This one is a little bit more doom and gloom. I shouldn't say doom and gloom, but it kind of just shows that we are at the place that we are today where, people are having problems keeping up with inflation and wages aren't really growing. because of just, you know, again, we went off the gold standard in 1970s. That was just economic, you know, death, you know, certain death at some point, and now we are finally experiencing it. So, so basically, with this kind of analysis, he's saying you really want to own crypto and technology stocks. Everything else is going to not do as well. So, but you can kind of see here. So this is, yeah, so this is basically interest payments on government debt. So this chart shows that they are going to have to print a ton more money to be able to get through that, you know, wave of debt. And so that'll be good for markets because money printing goes into assets and then it pushes the market higher. So that's one chart. This is really great right here, right? So this is the NASDAQ, which is again tech stocks, which we were just looking at. And this is global liquidity. So money in the system. And what do you see? You see like a 1-to-1 ratio of liquidity getting pumped into the market drives the market higher, right? So, and it boosts housing and it boosts gold. It boosts all assets because that is the measuring stick is the dollar. The fiat paper money is the measuring stick. And that's why it's going higher like that. So he's got some really great education on it. You know, and again, it's a little bit more advanced. You may not get it at first. But if you are really passionate and truly want to understand how the markets work, eventually you will come to really like his stuff. Eventually you'll come to really like his stuff. He's really, really good. So yeah, you can sign up for his free newsletter. But this piece that he puts out here on LinkedIn, I really liked it. It's really good. Sent it to a few of my friends that looked to me for advice. So, but it's kind of a whole long piece, and it really kind of paints a picture on like why we are in the world today, and why is it like it is. But it's pretty fascinating. Okay, cool. So the business cycle. Okay, so we talked about that. All right, so let's talk about some more. The first one, psychology. Okay, but sentiment follows price. Okay, so what is sentiment? Sentiment is how people feel about an asset. They're like, oh, Tesla's great. Oh, I don't like Tesla. Okay, that's sentiment. Okay. And so sentiment of the, you know, conglomerate of people, right, the public, when the sentiment is good, that's like a greedy reading, right? When the sentiment is bad, that's a fearful reading, okay? So sentiment, again, going back to the fear and greed, tells you a lot about where the market's at, right? So Coinbase, so right here, this big giant candle right here, where we had like a 60-something% drop in a week, that was when news, you know, came out of, oh, Coinbase might be in trouble. They might be going bankrupt, which was, you know, far from the case. But the news always kind of follows the price, right? And it'll be the same thing with the public. So back right here, when Tesla is trading at what, $270. It hit $100 in December, right? So if you would have thrown, you know, $5,000 into Tesla back then, I mean, you'd be up to like 13,000 on your 5,000, right? So, but what was the news back then? You know, electric car makers facing a barrage of bad news. They reported 40% year over year delivery growth. Okay, so I copied and pasted too fast. I forget exactly what the bad news was here, but I think you mentioned it, that they had it. They changed executives and yeah, okay, whatever. Yeah, CFO left, right? But they were in the news. They're, you know, all this like FUD, right? Fear, uncertainty, and doubt. All this FUD was coming out on Tesla, and so again, when you see bad news like that on especially a stock that's as strong as Tesla, you should be looking the other way. You should be looking at buying, you know, not worrying about it. So, and so it totally paid off, right? So we flushed down here, hit this trend line, and then boom, now we popped above it. Now this is now a support line. So it'd be very hard pressed to come back below this trend line now. We're gonna just keep probably going higher from here. So, but you know, it was bad sentiment right here, right? So that's a good thing to look for, is when something has bad sentiment on it, pull up the chart, see what it's doing. If it's really oversold, you're probably in a good position to capitalize on it flipping the other way. So, okay, so show me the charts and I'll show you the news, right? So Coinbase, again, was already flushing down. It was already, you know, again, algorithms, the big trading computers that manage a lot of the assets. They already knew it was below the 200-day moving average, which they don't like. It tried to fight back up here, couldn't do it, and then bam, waterfall, right? And then that's when all the news of they may be going bankrupt is, not really a big concern because, BlackRock is partnering with them. All kinds of big players are partnering with Coinbase. So a lot of different corporations want them to be custodians of their assets and in the digital asset space. Coinbase is going to be just fine. So, but again, that's when news of, maybe they're bankrupt, came out. So, so again, look for when you do see things like that, just take it in a very kind of with a grain of salt. And, the first thing I'd pull up is, okay, where are we at in the price cycle? What's that?
Do your research.
Yeah, I wouldn't even say necessarily do, I wouldn't get so concerned about the news more than anything. Again, I don't even look at the news hardly at all. Right. The only thing I would look at the news for potentially is when there is that FUD, is that fear, uncertainty, and doubt, right? Because it creates an opportunity for you to buy something that's likely cheap. So, and then, yeah, we kind of covered this a little bit, but expansion leads to contraction, contraction leads to expansion. Okay. So one good chart that shows it really well. Okay, so this is the US 10-year. So this is what mortgages are priced off of, right? And so this is right when the war broke out. So I was talking with a buddy, and I've even got a buddy who works in the financial space for PIMCO. They're pretty big company that's a asset manager, and everyone kind of had the feeling or mutual understanding that really the war screwed everything up. Well, I didn't feel that way because I again watch these charts. And so if you're watching the 10-year, so this is where mortgage rates were dirt cheap. You're getting, mortgages for 2.8%, which is the cheapest they've ever been. And then we go from a big expansion, we start tightening up, and then we kind of break out of this ascending triangle. There's all kinds of different patterns that you guys can get into with trading, ascending triangles, descending triangles. There's all kinds of price action, but essentially what it all kind of shares the common trait of is that expansion and contraction kind of phase, right? So, but anyway, so we expanded, we contracted, we're getting tight. It could have dumped here, but when it's already in an uptrend, it usually keeps going. And so right here, this is when the news broke of the war, like literally right here on this candle. So it was coming back to that area and saying, okay, can I break down beneath and back into it? Nope. And then boom, then it just launched. And that's right when stocks just started tanking, was because the debt market was saying, nope, sorry, debt is much more, expensive now. And it was just ripping higher, right? Interest rates were just ripping higher ever since that point. So, and you'll see that again, the more time you study and spend with the charts, you'll see these patterns of things tighten up and they get really tight, and then it'll expand and make a big move. Bitcoin's doing that right now. So we had this little, so even like right here, right? So you can see it flush down, and then what do you see? All the bodies of the candles are all very tight. They're all like, they're not moving very much. And then so that contraction led to this expansion. We kind of pop back down and we're still staying pretty tight. So likely Bitcoin is either going to, maybe do a dump, and it's going to come to this next level that I've mapped out because I'm actively trading Bitcoin right now, or it's going to pop out of here. So, but again, it's coiling tight and it's going to do something. The probabilities of it going either way right now are probably about 50-50. So, and so once you, kind of learn trading, right, it's all about probabilities. So you want to look at things and know, okay, my probability is higher of it going in my favor than it is on going the other way. So once you can identify those, areas of, okay, I have a more probable trade of me winning than I do losing. And if you do 10 trades, 100 trades, 1,000 trades, you're going to have some losers, but you've had way more winners because you've identified that risk reward, right? So that risk reward ratio is key. So like kind of, for example, on risk reward, so Bitcoin went from 16 all the way up to like, 32. So that's 100% gain. Okay, so as it goes up more and more and more, to enter and try to go up more, that's riskier because it's already gone up so much, right? As it goes up more, the risk increases of it if you're going to go for a long trade, right? So, and then same thing down here. As it was coming down, getting beat up, getting beat up, getting beat up, well, it's going to flip eventually. The risk to the downside is getting lower and lower and lower too. So, yeah. So how did it affect the market? What's
Yeah.
Mhm. Right. So so really I wanted to show this for the price action because it's such an exaggerated expansion and into a contraction. So that's really kind of wanted to just graphically show this. Once you guys get more familiar with the bond market, which is, you know, what the Federal Reserve kind of micromanages a little bit, but essentially it does its own thing more or less. Um, you know, so again, you know, like loan officers will look at this because they're, you know, lending against, you know, this for homes. You don't really need to know how this works more than, you know, as much. It helps once you get really, really good, it'll really help. But I would say, you know, worry about this once you've already kind of established some basics based on this list right here. So just, I mean, some quick technical analysis where we're at here. So this is like an upward channel. Well, upward channels don't go up forever. Eventually they'll break to the downside, right? So I think in 2024, you know, we're basically already peaked out in where interest rates are at. The Fed is going to pause at this next meeting, and you can just see it on the charts. I don't need Jerome Powell to tell me that. You can see it on these things because they just follow the market. That's all they do. They just follow what the market tells them. So, but eventually this is going to break and then it's going to come down and then maybe eventually kind of break that little support right there. So that's likely what it's going to do. While we're on the topic. So again, that's an upward channel right there, right? So if I go to probably the best upward channel that happened recently, oops, would be Apple. So, I mean, like, look at this, just like run up here. I mean, just this huge, like just straight up vertical channel, you know, and again, it doesn't do that forever. And what did it do exactly? Boom, then it ran out of steam and finally dumped out. So, that's when you can kind of layer on more things in your education is like, oh, okay, cool. I remember that upward channel. Yeah, that makes sense. It can't go up forever. Nothing goes up in a straight line, right? And same thing with a downward channel. Nothing goes down in a straight line either. Eventually it'll catch a bottom and pop out. So, yeah. If you were looking to enter a trade on Apple, like what would be a high probability situation here? Well, for me, because I really like shorting, I would have been looking back here to short, and then probably would have been taking profit right about here. It's going to go lower likely. So just by the RSI hasn't come down to the bottom. That's on a weekly basis, so I would go more so on like a daily. So you can kind of see here, right? Like even the daily RSI hit the bottom right here. And you can see that corresponded exactly with a pop right there, right? So again, RSI is like, it's one of the easiest indicators to follow because you're again, just kind of buying on that weak strength and eventually that strength's going to come back. And that's exactly what happened here, right? So from that flush out, you can see it kind of flushed out, touched this weak point here in the RSI, which you can see on the indicator, and then it popped up from there. But now, if we're here, I think we're probably going to kind of doodle around here. It may hold this 172 area. It could break down once more. And this is another indicator that I've got set on, which is pretty nice. draws on your levels that it's likely to come to. So honestly, this chart isn't that great right now. It's probably going to kind of just fumble around for a little while. So I wouldn't like looking at this. If this isn't something that great, I'd be looking to enter right now. One thing I think is probably pretty good to enter here very soon is going to be the NASDAQ, which is again the QQQ. So the seasonality of the market, we're kind of in a big seasonal trend. See if this pops up right away, if I can get it. So a lot of people look at seasonal trends, and this one kind of shows it here pretty good. So we kind of peak out mid to late October, and then we dump and peak out in late September, and then kind of dump into October. This is based on, pre-market or pre-election years, right? So they take data from all the pre-election years and basically average it out, and it creates this chart. And so it kind of tells you the seasonality of the market, which definitely has a high probability of playing out. So you can do that with seasonality on Apple, seasonality on Tesla, or whatever company you're looking at. So again, that's more of an advanced thing, but I do think that for me and where I'm at in my education and what I know is that the QQQ is going to set up for a pretty good bounce here pretty soon. Basically, like first week of October, I'd be looking to buy it, and it's going to rip up. It's probably going to rip up one more time, and then maybe kind of hit this like, I don't know, 410 level. And then I'd be looking to sell and roll that into something else. So if you want to buy something long term, Kathy Wood's ETF ARKK, that's something really good to be looking into long term. Bonds are really cheap right now. Bonds are like again, the sentiment on bonds is horrible, right? And so it makes like for a really good, again, risk reward, because they have gotten so beat up that people have just sold them off. They're like, forget it. Like there's no opportunity here. And every time that happens, it always flips the other way. So that's something I'm holding right now, is actually the TLT, or you could do the leverage play, which is TMF. And let me get this comparison off. Can't get this thing off. Come on. Oh, there it goes. Okay, cool. There we go. All right, so this is the TLT, which is one of the biggest bond ETFs. And actually, let's go to the regular one, not the leverage one. But you can see like prices that we're at, we're all the way back to like 2011 prices on bonds, which is a major flush out, right? I mean, that's huge. You're in this huge upward channel, right? Just like we've seen, what do upward channels do? They eventually break. And that's exactly what happened. So now that we're at this point right here, bonds are hated. No one's thinking about them. They've all sold them from the portfolios. And then, so what happens psychologically? All the sellers are gone. So what does that leave? Buyers. It leaves buyers to push the market back up. So yeah, there's a lot of layers to this onion of the market, right? But again, try to make it as simple as possible. The simpler you can make it, the better. And then once you really kind of like, you understand the language of really like all the different things that go into how the market works, then you can really get, a little bit more advanced and do, I don't know, you'll just have more things going on and more things that you're looking at. So those are, yeah. So, again, that's this indicator I have here, so I can turn it off, and it'll auto generate like levels basically. And so it's called Smart Money Concepts. If you go to TradingView and you type in Smart Money Concepts, that's the indicator that'll pop up. But basically it shows you demand zones. A demand zone is where buyers are at typically, and supply zones are where sellers are at. So there's no guarantee that you're going to hit this point and it's going to drop back down. But you know, you'll meet some resistance and you'll meet some selling pressure at that point, is basically what it's essentially telling you. No, it's based off of technicals and where sellers were in the past. So you can see right here, it hit that point and then it just kind of cascaded down. So historically, that's where sellers were, right? So again, this big point right here, it came up, hit it for a hot second, and then just cascaded down. So that tells you that's a strong area where sellers are at. So no, yeah, it really is. Yeah. Mm-hmm. Yep. Yeah, we'll go back to the list here. Mm-hmm.
Business cycle is big, but I'm
Yeah.
assuming you trade like more shorter term than that.
I mean, so I've probably got about, you know, 90% of my portfolio for the long haul now, that we have hit the bottom of the business cycle and we're going to be, you know, slowly expanding from here. But I do have a small little bit to where I am doing short-term stuff. So that's kind of the way I'm positioned right now. I think for most people, I think that they should look for good entries and, you know, add when it's low. And then if you are looking to kind of make, you know, shorter term profits, you know, when you get a good, you know, 10, 15%, you know, or more run, peel off, you know, peel off some money. And then and then look for another good entry, you know, if you are good at establishing that, and again, looking at those, you know, hey, what's my risk, what's my reward, and identifying those points, then you can get really good at rotating money and keep it moving to different things. But again, I would look at like 3 to 4 stocks at most when you're getting started. So really start with a very small list. I mean, at most, I would start, like, if you're really just beginning, trade the SPY and trade the QQQ and trade just those. So that's how I kind of got started. So I would really just trade those. And then from there, I got into actually trading the leveraged version of those. So you could do like the 2x leverage, the 3x leverage. I was trading the 3x. So basically what that means, if the SPY or the QQQ move 3% in a day, well, the 3x version of that moved 9% because it's magnified, basically. So the bigger the asset, you know, there's a lot more money that trades in that. The more technically and fundamentally sound they'll move. And so it's a lot easier to predict. So that's what I would say is start with something that has a lot of money in it. Again, the QQQ is a great thing to look at. You know, that's what I really like to trade the most. And then I'll kind of you know, look at different opportunities and different charts that I see if it's a really good setup and I like it. And I see the, you know, kind of probabilities playing out the way I think it will, then I'll take that trade. So for the most part, though, I'm really looking on, you know, from this point, looking at, you know, middle of 2025 to ultimately like really lock in a big run for the next like couple of years is what is how I'm mainly positioned. So yeah. Well, yeah. So this kind of goes back a little bit to, you know, the guy I was talking about, Ralph Bell. So his whole thesis is that technology outperforms the market, right? And the reason being is because it disrupts different parts of the economy. Like if you are, you know, if I own a business and the software makes my company much more productive, that's kind of, you know, these tools, these things make things more productive or medicines, more effective. That's why technology, money wants to flow that way because it does, enhance things, right? That in a way that it wasn't there before. So essentially, the money supply now that we're in the phase of the financial system that we're at now, the money supply drives the market. So the bigger the money supply, the more the market's going to run. When the money supply is basically getting pulled out and getting sucked out of the system, then the market goes down, and that's exactly what happened, right? Federal Reserve came in and raised rates. The bond market did its thing. The Fed was just kind of following what the bond market was doing, because inflation, hit, and that's why the bond market tightened. So anyway, so now that money is going back into the system, technology will outperform basically everything. So technology is what I look for. So Tesla, Warren Buffett, I think like 35% of his portfolio now is Apple, right? That's a tech company. We have all got Apple phones, basically. They've got the kind of the monopoly on the cell phones. Cell phones aren't going anywhere. Plus they come out with a new one, like 4 times a year, right? So that's why Warren Buffett has such a big stake in Apple, because it's a tech company and they're not going anywhere. So they're going to keep seeing, bigger and bigger profits, basically. So cryptocurrency is definitely, a good, tech innovation. This week, Visa partnered with Solana to manage their transactions. Yeah, so that's huge. The California DMV partnered with Tezos to help transfer their vehicle titles. So we're starting to see the adoption start to happen, which is really cool. So it's starting to get pretty exciting in the crypto space, right? So all the cryptocurrencies, they're software companies. That is exactly what they are, right? So people think it's like, oh, it's meant to replace money. It's like, no, they are software companies. They're tech companies. They have people working for them. They have developers. That's all it is, right? It's basically just a software network. So that was Solana. Yeah. Solana. Yeah, here, let's pull it up real quick. Solana's actually at a pretty good buy level right now. I would recommend you guys stick with the bigger ones, the bigger, blockchains like Bitcoin and Ethereum heavily. And then if you want to play with like 10% of a crypto portfolio to put in some of the smaller stuff, then that's good too. I'm a little bit more aggressive than that because I do a little bit more research, and I have a little bit good backing on what I think will do well. So Solana, a lot of people are talking about it. Raoul Pal's a big fan of it as well. He's got a pretty good eye for spotting these things. But so again, talk about sentiment down here when it hit like $9 all the way from 220. It was all the way down at $9, right? So this was at the top of the bull market in November. That's where we peaked out in the crypto market. November 2021, then December of 2021, that's when the stock market peaked. So crypto moves a little bit faster than stocks, and it's good because it's a leading indicator. So whatever Bitcoin does, the stock market's going to do right after that, which is pretty cool. But anyway, so back to sentiment. So right here, when it was just like flushed down all the way down to $9, they were freaking out. Oh, Solana's dead. They're done. That's it. And if you would have bought some down here at $9, now you're all the way, like, you doubled your money from that $9, point. And now they're partnered with Visa, and it's going to do really well. So
If you go for
Chainlink, yeah. Yeah, Chainlink's, so if you look to, so Jamie Dimon, right? So Jamie Dimon is the CEO of JP Morgan. So let's see. Let's see if I can find some of the see if he talks about it in here. So basically, Jamie Dimon's been featured a bunch of time in the news, and he's like, I don't like crypto. It's, he's like, but there's a lot of value in smart contracts. And he's, really bullish on tokenization of the financial system. So basically, the way that stocks are settled is pretty antiquated. It's been the same way for a long, long time. And it's, time for a big overhaul of how that is done. And the blockchain is like a perfect way to tokenize you know, the financial assets, stocks, real estate, all kinds of different things. Fine art, you know, you could have like basically like a fine art fund of like a one specific painting where you buy a small portion of it via a token, right? Like fine art's going to get tokenized. That's going to be super cool. There's companies out there that do it now, and they kind of do it where it's like syndicated real estate type thing. They're like, oh, hey, here's our emailer list, you know, here's our deal, you know, throw money in if you want, we manage it. That's kind of the same thing. But, you know, eventually you may be able to buy like certain fine art pieces, like, you know, through like a brokerage account, which is pretty cool. So he's very, you know, skeptical on, you know, the crypto market as a whole, and validly so, is because there's like, you know, what, 20,000 different projects. You know, just like anything, there's going to be winners and there's going to be losers. And right now, there's a point where there's going to be a lot of losers, but the winners are going to do really, really well. Right. So, yeah. So, I mean, like, so Solana, I own some Solana. But basically, you want to follow essentially that business cycle, right? Because it gets such a big boom and such a big bust because of the money going in and the money coming out, and because it's a small asset, and a volatile asset. That's why you see the big boom and the big bust. For me as a trader, that leaves opportunity for me to psychologically see when the market is at max greed. I should think about peeling some profits off, right? So that way, when it goes to a big fearful state longer term, I just made it dropped like 60% and I can buy back in with low risk. So, yeah, so I'm picking up some Bitcoin right now, definitely some ETH. I mean, I'm spreading my money out. I'm not keeping it to just one thing. I really like Chainlink. Solana is going to do pretty good, I think. But again, I think if you're kind of new to the space, you don't want to research as much, I think you should probably stick to like the Bitcoiner and ETH and be completely happy with tripling, you know, doubling, you know, maybe 4xing your money. Yeah. And then I will, you know, take advantage of some shorter term stuff. So like actually like right when we were looking at Bitcoin, right, when it did this little pop, and it could have played against my favor, but I had a feeling it wouldn't, just based on how the candles were looking. You know, I bought some right here. It popped like 7%, and I actually locked in that 7% right there. So yeah, and then, you know, again, that is very hard to do. It is very hard to catch little bottoms and sell at peaks and then get back in. It's taken me a long time to be able to do that. For the most part, you should buy at good levels and hold it, right? Till we're at the top of the business cycle again in 2025, and then lock in some profits. So
You go back here.
when you say divisional amount, like if I like the same amount or a less amount, is that what you're kind of getting at?
Yes, if you put $10 in, if you're 20, you put 10 in.
Yeah, and that would kind of be my strategy to an extent. It all depends on kind of how I feel about the trade. If I'm like, it's a little bit more high risk, then I'll size down. If I feel really good about it, I may size up or keep it at the same size. So that's really all, you know, you'll start to kind of figure that out based on when you spot risk in the market versus a low risk type play. So
Also get a sense of like when price point would kind of bottom out due to what was that? Those bars again? Those what you call the smart.
oh yeah, smart money concepts.
So
Yeah.
like if smart money concepts shows, let's say, buyer's pressure from the bottom up, right? Wouldn't that indicate like where price bottom?
Yeah. So let's pop it up here. So again, and it almost works in hindsight a little bit. Like, I mean, it definitely showed a demand zone right here once it finally spiked. But now that we're all the way up here, it's not showing me stuff like that because that's too far back. It's likely not going to get back there. But yeah, it is showing you. So I mean, like exactly like where are we at exactly right here, right? We're in this demand zone right here. And that's why it wants to pop up. That's why it's kind of like chirping up like this, because we're in this demand zone from this point right here. And so that's exactly why I have this yellow box drawn right here. And then the next demand zone would be right here. And that's based on a different indicator. So again, not to get, overly complicated, but it's, start with fewer things. And then as you, figure things out more, then you'll kind of learn to look at different situations in a different way. So you can see it's probably likely not going to get here. But this next box would be at this demand zone. So.
Yeah, kind of quick question, maybe like why are certain things not available? So I use one of my brokerage accounts, Robinhood.
Yeah.
So why it's not available on Robinhood?
So it was, but then the SEC, they didn't put like a ban on Solana. I forget what term they used, but they essentially kind of put like a ban on Solana, and so Robinhood had to them off because of that. So you can go on other crypto exchanges and buy them. But in light of that, because Robinhood is a, registered stockbroker, they didn't want to get in trouble with the SEC. They said, okay, cool, we'll take it off and get rid of it. So
That's what we should be worried about at the time.
I don't think so. Yeah. So especially when they're partnering with Visa, like, you think a conglomerate like Visa gets in bed with somebody and is like, oh, maybe we got to scrap this whole project with them, but it's like, no way. Like so the way I see it is, again, that, narrative follows price, right? So I think that, the SEC is, kind of flexing their muscles right now. And then, magically things will get better and they'll come around, and that's when the bull market is going to start. And it's going to start basically Q4 and Q1 of next year. So. Yeah, it does. It's what's the halving date? I think it's March. Yeah, I think it's in March. So yeah, I mean, like, traditionally, there's usually a good run around the halving. So what's that? Yeah, so the halving basically it is a kind of function that's programmed into Bitcoin. So there's miners that confirm transactions and help run the Bitcoin network. So it's basically like all these different, computers running and confirming these transactions. And when they confirm those transactions, they get paid a small fee, and it keeps the network live and running. So some have big operations that are basically data centers that have tons of miners, but essentially they can mine so many Bitcoin at a time. And then when the halving happens, it happens, once every 4 years, the amount of Bitcoin they can mine shrinks by half. And so it's been programmed into the software of Bitcoin that happens every 4 years. And so that the mining supply, the supply that gets pulled onto the market, gets smaller and smaller. So yeah, that's a function of the software of Bitcoin. So yeah, I know there's Bitcoin, crypto is like a whole different language. So, and again, it's software, right? That's why it is difficult. I'm somewhat techie, but it's, you listen to some of these guys, if you follow some of the developers, they're throwing out all this stuff. It's just way over my head. So, yeah, so I think, yeah, again, around the halving next year, it's, definitely going to do good. And that's what it did in 2020, and that's what it did in, the year before that. So 2016. So, and yeah, and then the 4 year, cycles have just kind of aligned with the business cycle, right? So, that's basically why crypto follows that 4 year cycle, is because the business cycle is about 4 years, and it kind of runs like that. And so some down cycles are worse than others, which we just went through a really bad one. So, yeah. But anyway, you guys got any more questions? Yeah, absolutely. Yeah, so I'll throw this recording on my YouTube. So if you guys ever want to go back to it, let me know. Or well, not let me know, just go to my channel and pop it up for yourself. And don't get overwhelmed, right? Like, I know it's a lot of things to look at and digest, but really, again, just try to make it simple. You're gonna do super, super good if you can understand fear and greed and really have patience to let things get back into a fearful state. and sell in a greedy state. So even just that alone, you're gonna be really powerful. Yeah, absolutely.